I wanted to show you guys something that I noticed here, and I noticed it a lot throughout my travels here recently and speaking to employees, contractors, business owners. We are facing a crisis, and it is becoming of a growing concern. I want you guys to take a look at this. Look, see this? This is the middle of a renovation project, okay? And you're going to probably see a lot more like these in the future where there's nobody working. There's no staff, there's no crew, there's no construction taking place. And this is the beginning, telltale signs of what we're seeing becoming more and more prevalent in real estate, in housing, in business in general, as we experience companies with mass layoffs and hiring freezes and job loss, as we anticipate the Fed's next announcement for CPI reports and inflation increase and interest rates going up, with what they say is going to be pain felt by families and businesses as we try to reel this economy back in. And the issue, the growing concern that many folks need to be aware of and cognizant of and realize is going on, is there is a huge liquidity crisis amongst banks, amongst people, amongst businesses, and that means that they're running out of money. And when they run out of money, they are prone and possibly susceptible to bankruptcy. They're going to have to scale back. They're going to have to give up some things. And we could very well see housing stop. We could see construction in general stop. We could see businesses going under, closing their doors, shutting down 150 stores, for instance, Bed Bath & Beyond. We could see many folks losing their jobs. And while at the same time, the banks are very concerned about their losses and mitigating their loss and their red in their ledger on their balance sheets and their profit and loss statements to try to retain shareholders and keep stock prices up while maintaining profitability. The banks have their own responsibilities that they have to take care of first. So what do you guys think the banks are going to do? Here, come here. What do you think the banks are going to do? They are going to go through their accounts. They're going to evaluate where they're most vulnerable, and they're going to start flagging accounts that they think are going to be potentially high risk loss factors for the banks losing money. And the banks don't want to lose any more money. But this is going to happen. It's inevitable. And with that being said, as businesses shut down, folks are going to lose their jobs. Construction projects aren't going to get completed. People are going to be left in limbo. And we're going to see a huge influx in our economy and consumer confidence, company budgets and spend allocations. We're going to see a limitation on credit. If you're relying on credit personally or from a business standpoint or both, I expect there to be some extreme limitations moving forward as the money supply begins to tighten and as banks start to hold on to more of their assets, more of their cash, more of their capital, and less likely to lend it and allow folks to borrow against it, for the fact that the banks themselves are already over leveraged through fractional reserve banking, which basically takes your deposit and splits it up 9 million different ways, exaggerating, but it splits it up and allows others to take your deposits and use them for investments. A lot of those investments aren't quite panning out as expected with the current conditions of the economy. Granted, federal deposit insurance, FDIC, is there to protect accounts up to a maximum of $250,000, $250,000. But there are limitations to that. The reserves of that program are limited, and it's not an easy process to go through. And if we were to look at it from the position and perspective of, let's just say, Florida insurance companies, there are folks in Florida having their insurance policies canceled, revoked, non-renewed, and or demanded for high premium adjustments, price increases, or heavy and expensive repairs and maintenance just to maintain coverage, as the insurers, the policy holders, the carriers don't have the money available to pay out multiple claims that they actually hold policies for in the event of a disaster, in the event of a catastrophe, in the event of a Hurricane Earl approaching the Atlantic coast. A lot of homes in southern Florida are at risk, and their insurance companies may not have the money to back up the claims, which would then force the insurance companies to either drop the carriers, probably at the worst possible time, right before a natural disaster is about to hit land, unable to find protection and coverage fast enough, or after the fact, while you're waiting on repairs, only to find out that your insurance provider, the company that you've been paying a premium monthly, annually, for years and years and years, decides to close its doors and go bankrupt, leaving you left high and dry, holding the bag. Now, I don't want to make it seem like this is all bad news and, doom and gloom and panic and fear run for the hills. There are solutions to these problems, and we're going to discuss these in future videos. But for now, I want you guys to pay close attention to what's going on around you. We have the possibility of a severe railroad strike, as railroad workers are just days away from having the ability to walk off the job, basically shutting down rail, shutting down the supply chain, shutting down commerce, having a huge impact and effect on our food supply. Meanwhile, we're already seeing increased prices of fertilizer, which is further driving increased concern for the ability to produce more food for the upcoming harvests, which, if we don't find a solution to this problem very, very quickly, we're going to be faced with severe food shortages, high prices and inflation in stores, possibly chaos, panic, disturbia. Who knows? People could lose their minds. But we've got that going on. We've got announcements of DHL. Although DHL isn't a huge transportation or carrier for packages here in the United States, DHL has workers that are already going on strike. UPS workers are threatening strike. Several other unions across the country are preparing to go on strike at a time where the U.S. economy is very fragile. Global economies are very fragile. We have compounded problems on top of each other, and we have to be paying attention to what's going on and watching the trends and preparing ourselves so that we don't get just completely blindsided by, let's just say, for instance, a contractor walking off of a job because they don't have the funds available to complete it. And this is real. This is real life. This is what's going on in our economy. And I don't know because I don't watch every single mainstream media news outlet out there, but I would be willing to bet that a majority are not bringing you guys this information, this perspective on this level, and explaining what's really going on. Because a liquidity crisis in our economy, whether it's in the housing market, whether it's in construction, whether it's in business, and particularly if it's in banking, is a huge issue. And here's the deal. The government is not, in my opinion, in a position nor interested in providing any assistance to avoid this catastrophe. Now, granted, any assistance in the form of a bailout and a stimulus and any release of funds to stimulate this economy could cause extreme heartache and pain, as we do have to come out of this rut. But with that being said, and we know that, we need to be prepared for SHTF, and knowing that we're pretty much on our own here and we don't have much support from Washington. We don't have a lot of support from the White House. We don't have the Biden administration to rely on. The Fed is not looking to bail us out. Now, granted, there may be a few companies out there that there was once a saying, too big to fail. Maybe those still exist. Maybe there's a few of them out there, but it doesn't really solve the problem. It just continues to kick the can down the road. And you guys see where we are right now. We have airlines with pilot shortages. We have companies looking to pretty much just eliminate the human workforce altogether and move to automated AI technology because people don't want to go to work. But I think it's not because they're lazy. I think it's just because going to work is such a mental drain for the conditions that you have to work in, the treatments that you have to endure, the minimum income that you're going to earn in relation to just the basic transportation costs of getting to work, how much it costs to buy food and necessities, pay utilities, rent, mortgage. Everything is going up and going through the roof. And granted, it's hard to find hardworking employees willing to put up with this for little pay. So the companies are making adjustments and finding new ways to automate their processes and eliminate the people. But all that means is that the people are going to have less money, less income, and less ability to afford life day to day. I want you guys to pay attention. I want you guys to be aware. I'm going to continue to bring you guys updates and share this information with you. Any comments, questions, anything you want me to cover, hit me up below. I'm going to keep an eye on what you guys are talking about. I'm going to keep reading the emails. I'm going to keep bringing you guys what you need. And hopefully we can all be better prepared for what we have coming tomorrow. You guys be safe. Take care. See you soon. Bye.